crazy things happen with your portfolios. And so I'm going to try to put some of this into context for you so that you can kind of know what's going on. Do me a favor as you come in, please hit the thumbs up button, hit the share button, and definitely subscribe. The Black Financial Channel is a financial news platform designed for you. It is Black owned. We're about 4 times larger on YouTube than Black Enterprise. So we are making strides very, very quickly because our analysis is very, very good, and we keep it at a very high level. So feel free to join theblackfinancialchannel.com. Make sure you sign up. All right, so here's what here's what I want to talk about for a second. Today was a pretty horrible day again for the stock market. Stocks continue to really plummet. Just when everybody thought that the declines were over, it turns out that that there's more to come. You're not really seeing a lot of the reversals that people are accustomed to. Usually by this point, you see the stock market kind of starting to make a comeback. You start seeing, movement that's pretty positive, and makes us get the feeling that, okay, all downturns are temporary and quick and easy and short-lived. Well, in this particular case, that's not what you're getting. In this particular case, you're getting something that's a little more prolonged. You're getting something that's a little bit deeper. I have to double check to see if we're in bear market territory, but I believe that we might be close. And so anyway, so here's what's happening. Okay, so let me go through some of this. Hit the thumbs up button, by the way, if you haven't done this yet. So I'm going to read this to you. It says here that even after a 0.5 point rate cut, the market is expecting the Fed to do a lot more. The Federal Reserve, this is according to CNBC, the Federal Reserve delivered a 0.5 percentage point rate cut on Tuesday, but markets slumped on the news. That's a big deal. That's a big deal that they issued a 0.5 point rate cut and the market still went down. Typically, they would expect that a rate cut of that magnitude would lead to a surge in stock prices. A lot of people thought that was going to happen, but it didn't happen. And basically, that's the market's way of saying it's not good enough. That's just not the type of move that's going to benefit us. We really don't care. It's like somebody expecting you to feed them. They say that they're hungry and you promised, that you're going to feed them, $100 worth of food, and you give them a couple of cheeseburgers, and they're kind of like, whoa, wait a minute, I was expecting more than that. So right now, the market is very hungry. The market is very worried. People are deeply concerned about what's going on in the market, and for good reasons. This coronavirus thing, I've talked to you guys about that a lot. And basically, in the beginning, what was fundamentally true is that the only thing that they knew for sure about the coronavirus is that they were unsure about the coronavirus. Like, the only certainty we had was uncertainty. That was the only thing we could be certain about. You know how they say the only rule is that there are no rules? Well, in this particular case, the only certainty was that there was no certainty at all. And so right now you're seeing, so according to CNBC, Wall Street immediately started speculating what was next. So Wall Street, remember that the stock market tends to move based on expectations, not so much on realizations. Realizations, what actually happens only matters relative to what they thought was going to happen, right? So everything's relative with the stock market. It's not about what happened. It's about what happened compared to what they thought was going to happen. So, for example, it's like if you ask me if a guy's 6'5", is he tall or is he short? Is he tall or is he short? Well, he's not tall and he's not short, or he could be tall or he could be short. It depends on what you're comparing him to, right? If he's in the NBA, he might be considered pretty short. If he is, if he's in the circus with a bunch of little people, or something, or if he's around children, he would be considered very tall. So ultimately, whether or not the rate cut was big enough wasn't a matter of the magnitude of the rate cut. It was a matter of how the rate cut compared to what the market expected. The market expected a dramatic rate cut, and instead it got kind of a weak little wimpy rate cut. And so what's happening now is that the market is also speculating on what to expect next. They're expecting more rate cuts later this month and in April. This rate cut was an emergency rate cut by the Federal Reserve. Interest rate cuts are designed to stimulate the economy. It's like an injection of steroids into the economy. And so they were hoping that this steroid injection or this adrenaline injection was going to fix some of the issues that we've been seeing, and it just hasn't done that. It just hasn't done that because, it's just what it is. Now, how do I feel about negative interest rates? They're kind of a funny dynamic, but they're a reality in a lot of places around the world. And so I'll just say that I have a hard time processing them. When they first started, I was trying to sort of figure out what that really means, but it's certainly a possibility. I mean, negative yields are all over the place. Yields are basically the effective interest rate that you earn on a bond investment. So as bond prices go up, yields go down. So when yields start going down, that means bond prices are going up, which typically means people are moving away from stocks and into bonds, because when people demand more bonds, the prices of bonds go up. I hope that makes sense. Maybe it doesn't, but I'll explain more as we go on. Okay, so do me a favor, hit the thumbs up button, hit the share button, hit the subscribe button. Make sure you subscribe to theblackfinancialchannel.com. And also, don't forget, if you want to still do that $1 monthly trial of my stock market investing class, you can go to theblackstockmarketprogram.com, THE, that's theblackstockmarketprogram.com. Please hit the thumbs up button and also retweet and all that good stuff. Okay, so let me read more of this to you. Some market participants may also want the Fed to do more quantitative easing. So basically what they're saying is that they want the Fed to increase the money supply. They're sort of, it's an interesting economy that we have. We have kind of a spoiled economy. I think that we're a little bit spoiled, meaning that, people are used to the good times rolling. Donald Trump, for example, is a guy who invests heavily in the stock market. He's always been a big investor. He's been a major player in stock market investing for many, many decades. And so Trump is consistently criticizing the Fed chairman, Jerome Powell, because he wants him to do more to stimulate the economy. Well, why is that? Well, because Trump makes money, number one, when the economy boosts up. That's why I tell you guys to become investors, because the one way to become rich is to do what rich people do. Donald Trump's dad, Fred, became rich because he started emulating rich people. He was a carpenter that used to fix houses. And instead of being a carpenter just fixing houses for rich people, Fred Trump, Donald Trump's father, said, I don't want to just fix houses. I want to own these houses that people are fixing. I don't want to just rent somebody's house. I want to own the property, and I want to own lots of property. I want to receive rental income. So real estate is actually the pathway that Trump's family used to become very wealthy. Or you could say that you could say he's a good businessman or a bad businessman, but you have to admit that he's flying in that private jet. People don't have private jets for no reason. He had a private jet because he's made some money, right? He bought a $400 million hotel at the age of 28 or 29 because he had access to some resources, right? So ultimately, as much as we want to say, oh, it's because his daddy gave him this and his daddy gave him that, that's fine. But my question is, okay, you're the daddy, you're the mama. What are you going to do for your kids so that they can also have access to the best things in life, right? So do something for your kids. It's really, really important. Don't get jealous of rich people. Study them, study kind of what they do, so you can pick and choose from what strategies you want to use, because working for other people just isn't the way to get there. So anyway, I'm gonna keep going. Let me keep reading this article. So the Federal Reserve's extraordinary rate cut Tuesday is likely the first of multiple efforts to stem fear over the threat of the coronavirus poses to global growth and financial markets. No sooner had the U.S. Central Bank announced a 0.5 percentage point reduction than market participants began speculating on what was next. Wall Street broadly expects the Fed to follow up with another rate cut in a few weeks, followed by more monetary easing in April. In fact, if reaction from Tuesday's move is any indication, it would take a lot more for the Fed to assuage heightened worries over a virus-induced threat to the longest expansion in U.S. history. Quote, the question from here is what further adjustments do they make, said Bill English, former head of monetary policy for the Fed and now a professor of finance at Yale School of Management. Yale has a very good school of management. They're very good in this area. And so, yeah, I had some classmates from Yale, stuff like that. The answer to what is when their outlook for the economy changes, and it may be appropriate to do something more. That's going to be hard to communicate over the next few months. Markets indeed will be demanding more action, even if the coronavirus damage doesn't show up in the data. So basically, they're kind of fighting an imaginary adversary. I kind of feel that they're still fighting against the fear factor of the coronavirus. Because if you really look at it, I mean, the coronavirus itself has not had a huge, direct, immediate impact on productivity around the world. I mean, it's not like, you have a factory where everybody's so sick that they can't work. But what's kind of happened is people just sort of see the storm coming and people are reacting to that. And so even the preparation for the coming storm, when you're shutting things down, canceling things, shutting down travel, you're sending people home from work, like even in our neighborhood, they're already sending out warnings to parents, that they may have to keep their kids home from school, that you should stock up on certain supplies, that they might have to shut the school down so they can go and, clean everything, clean up, disinfect the entire school. All those things cost money. So, the reality of something, costs money, but the preparation for that reality also costs money. So ultimately, at the end of the day, I think a lot of this reaction is driven by this constant fear. Remember, the word for today is fear. So type fear in the chat if you get what I'm saying. It's all about fear. It's all about psychology. And investor psychology is huge. Actually, that was my area of specialty when I was getting my PhD, was investor psychology, because I'm always fascinated by how money shapes people's minds. That's why I'm always interested in things like money and relationships. I was always just so stunned by how people's relationships change because of money. So let me see here. Let's see. The market didn't like it and sold off sharply during and after the Fed chairman's comments. And here's what Jerome Powell said. He said that the Federal Open Market Committee is prepared, quote, prepared to use our tools and act appropriately depending on the flow of events. So basically, he said, we're prepared to use our tools and act appropriately depending on how things go down. That wasn't enough. I think that what people were looking to hear him say is, we'll do whatever we got to do. We're going to, do whatever it takes to fix this. But the question is, what are they there to fix? Are they there to fix, the economy from a fundamental standpoint? Well, that makes more sense. But are they, or reduce unemployment or something, or are they just there to keep the stock market propped up? I don't think that should be a goal of the Fed. And I don't think that is the goal. So that becomes the question, right? So if the stock market starts to plummet because of fear and because of these psychological factors, does the Fed feel that they have to respond on a fundamental level? Some people like market corrections. I'm a person who doesn't mind a market correction or even a little bit of a bear market, because I kind of felt that the market was overvalued anyway. I've been talking to you guys for years about the stock market and begging you to invest for your children and for your family. And the whole time, the reason I was doing that was because it just wasn't making sense to me. The market was just too good. The market was doing too well. There was just too much, too many opportunities, too much money being made. And so ultimately, it's one of those things where all good things eventually do come to an end. Everything ebbs and flows. Alicia always talks about the Hermetic principles, and the Hermetic principles basically say that things can't keep on going up forever. Eventually, you have a downside. If you have all the ups, you're going to have the downs, and that's what this is. I think that what's shocking about the coronavirus is that it's a surprising down. It's not something that anybody anticipated. It just kind of came. It came out just out of nowhere, and it just kind of got messy and ridiculous. And so anyway, so let me see here. Let me read more here. Cuts in March and April. Indeed, with Tuesday's announced cut by the Fed, only another percentage point or 100 basis points left to go. Tuesday's announced cut, the Fed now has only another 100 basis points left to go, and Wall Street expects that the central bank will not waste time using up the remaining space. That means they can only cut another 100 basis points. Both Citibank and Bank of America Global Research expect the Fed to do at least 25 basis points more at the March meeting. Quote, further cuts may be controversial as some on the Fed committee will want to wait and see how the 50 basis points cut works their way through the economy. But either soft data or tighter financial conditions will likely convince most to cut further. A fearful Fed. While markets wanted policy easing, the execution didn't go very well. Quote, the communication of this stuff is always hard. No one really ever knows what markets are thinking and doing, English said, but partly the lack of positive effect today is what people thought they learned, that the Fed was more worried than they thought. Is that maybe people thought they learned that the Fed was more worried than they thought. Okay, so basically what they're saying is that they believe that the Fed, who are people that study data and markets all day long, they are just worried. They're looking at this and they're saying, okay, what's going to happen here? You're seeing a lot of interesting dynamics here. I mean, with this virus coming right out of China, it's hitting, the epicenter of one of the most important manufacturing bases on earth. So this could actually shift the manufacturing base. Maybe people start getting their products from Mexico or some other place. I wish they could get them from Africa, but I don't know exactly where the infrastructure is for that just yet. I know India is ready for a lot of that stuff too. And so, so it's really kind of an interesting time. It's very strange. I don't know exactly how things are going to play out. I know that that Robinhood kept going down. Yesterday, Robinhood got blasted pretty bad for going down. How many of you use Robinhood? Anybody in here? Give me a yes or no if you've ever used Robinhood, the Robinhood app to buy stock. The Robinhood app went down yesterday, and that was a big deal. A lot of people are going to get in trouble for that because they were supposed to be able to withstand this kind of volatility and this kind of trade, this level of volume, and they couldn't. And today they did it again. They went down again. So that opened my mind into thinking about other forms of diversification that you need to do. You may want to make sure that if you use apps, I would not put all my money in one app because if Robinhood is screwing up the technology and can't keep up with the trades, what's saying the technology can't cause them to suddenly just miraculously lose your money and all your money just disappear, right? So I don't want all my money to disappear. So I already used several different apps, but this really woke me up to say, okay, let's spread it out even further. Maybe I'll add another app to the, to the stash. Maybe not to the stash, sorry, because Stash is an app. But add another app to the list. I already use things like E-Trade and Ameritrade and stuff like that, so I might re-engage those accounts a little bit more. But I think spreading your money out, that's what I'm going to do. I'm not telling you what to do because I'm not giving investment advice on this channel, but that's what I plan to do. And also, if you want to ask me if am I buying the dip or am I running away? I'm buying the dip. I'm buying because I want to. I just, historically, buying the dip has always worked historically for the last 150 years or whatever. And so I'm going to just keep doing that. That's my plan. I'm a long-term investor. So in 10 years, I believe this coronavirus outbreak will be looked back upon as kind of a pretty big deal in the sense that we saw a big drop, but there's never been a decline where there wasn't a recovery. So that's what it is, and that's what I believe, and that's what I'm thinking right now. So do me a favor, hit the thumbs up button, hit the share button, hit the subscribe button. Weird excursions, what am I buying? I buy a lot of stuff. I own about 150, 200 different stocks. I spread my money out. That's my number one rule. A lot of people are aiming for dividend-paying stocks during declines because dividend-paying stocks tend to have a little bit more consistency in the ROI because companies are very reluctant to give up the amount of dividend that they pay because cutting your dividend sends a really bad signal to the market. So a lot of companies will even borrow to make sure that their dividend remains at a certain level. So, but remember, everything has a price. So you might get a dividend paying stock because, the yield is a little more consistent, but the yield might be a little bit lower than you get from, say, a tech stock or something like that. And I do believe that if it does get to the point where we hit a pandemic, the World Health Organization has not announced whether or not the coronavirus is a pandemic or not. But if they announce that it's a pandemic, then you'll probably see the tech stocks get hit the hardest. The Ubers and the Beyond Meats and Teslas and companies like that. I can see those being the first ones to really hit rock bottom. So it's going to be interesting. So pay attention, keep your eyes open, stay woke financially. And if you're not an investor right now, make a commitment to me right now that you are going to invest for your children. Just type yes in the chat if you're going to make a move to become a better investor for your kids. If you're already investing, say yes. If you plan to become better at investing, if you're not investing, say yes to say that you're going to go download an app. You can download Stash, Acorns, Robinhood, or what's that other one? Well, you got TD Ameritrade and E-Trade and all that, but you also got Cash App. The Cash App. Yeah, the Cash App. And you can download that and buy stock on the Cash App. So just take my word for it. I just really want to say, like, historically, anybody who's been buying stock consistently for the last 30, 40 years is in a better economic condition than somebody who did not do that. You can't get wealthy just by working for other people. You have to become an investor of something. So what do you love? What do you invest in? Where are you planting seeds for the future? That's all I'm asking you to do. Just plant your seeds so that your harvest will grow so you can take care of your family. That's what you're supposed to do. All right, guys, do me a favor. Hit the thumbs up button, hit the share button, hit the subscribe button. Make sure on the count of 3, everybody retweet, share, subscribe, hit the thumbs up button, theblackfinancialchannel.com. That's a daily financial news and commentary platform from a Black perspective. If you want to do the 30-day trial in my stock market class for just $1, it costs you $1 to join my class. It is a great class. Everybody loves it. Feel free to go to theblackstockmarketprogram.com, THE, that's theblackstockmarketprogram.com. And so anyway, I'm out of here, guys. Take care, and please keep coming back to the Black Financial Channel, and that's what it is. What's your primary app or account, says Anthony? I don't have a primary one. I use a lot of them. I use Robinhood, Stash. I own crypto. I have stuff on Cash App. I bought stuff. I just have a lot of stuff in a lot of places. And now, if you're asking what my Cash App is, somebody asked what that was. It's $ Dr. Boyce. So if anybody ever just wants to send me money to support the platform, feel free to do that. I wish I could pin it, show Ann, but I can't because you're on my phone and my thumbs are too big. But if somebody could type theblackstockmarketprogram.com in the chat so everybody can see it, that would really help me because my thumbs are just too big. I would end up, if I hit a button, like y'all go disappear and it'll be bad. So theblackstockmarketprogram.com. So I'm out of here, guys. Take care. Have a great day. Love you, and I'll see you soon. Peace.